Review of Thursday's move, today's move, and then we're gonna have a look at like the daily candles and how they formed the overall weekly candle, and then gonna do a weekly review, just round up all the trades I've taken this week and just see how we're getting on. I think I've only taken 2 trades this week, so that's fine. Couple trades that I could have made a lot more on, but it is what it is. So as long as we're not losing capital from making mistakes, we're doing all right. So just gonna go into the daily chart. See here, last 2 days, we had a bit of a choppy day yesterday, and then today we just continue down, take all this liquidity here. I was thinking that maybe we'd see like a buy setup form, from here and then push up, but market is clearly still very bearish, so I think we might actually see some heavy bearish movement down. How far? Here or here, all depends really. As you can see, we're now come up to equilibrium here, come back down to 0.62 level, pulled up a bit, and then push down into this order block again. Is this a daily fair value gap in the OTE? Yeah, so it's possible that we could be coming down to fill this imbalance, just stop everyone out before we then make the move up, but yeah, we'll just have to see. Anyway, right, so going into Thursday's move, let's have a look. Yeah, I missed an absolute banger. Unfortunately, I must have pressed buy literally the second that price moved up, because you can see here I marked out my entry. It's going to take me so far back every time. Yeah, so you can see, right, let's actually just run through this. So Thursday, come down into the London session, fill this imbalance over here, trade back up. Didn't quite sweep that. Imbalance in here, just accumulating. Filled this, pushed up, same again, sweep this. And then, yeah, so once we swept this, price is absolutely dumped. It took the internal sell side, and then I think we had a news driver here, which is what brought it all the way back up here. You see that wick onto this order block, tap that, and then we just continued down. I think that took like an hourly. How far back is that just taking? So this line here, yeah. So we filled in this gap that I'd mentioned the other day, and yeah, from there, the price looks really nice on that session. So this is a 5-minute inverse fair value gap. We had very good structure, tap this order block, trade back into the fair value gap. Price moved up, and I wanted to get my entry in around here. And literally, as I had like the little menu up to create the order like this, and I was putting it in and just tapping buy basically. Price had just bumped up within like a matter of seconds, and I ended up getting entered in at this line here. So you can see, like, I had to close it early, minimal risk. I lost I think like 23 pence, so literally nothing major at all. But I just had to close it early just because of the fact that my entry was fucked and my risk to reward was completely off. It was showing my stop loss as like my entry, and then my TP was just higher than I wanted it to be. Like, this was going to be my initial TP here. As you see, yeah, it's just like, is what it is. Yeah, I was kind of annoyed with that, but can't be too mad about it. Price actually moved beautifully. and then traded up into this previous order block that we've marked out. Before coming down, tap this here, you know, similar sort of thing, and then back down for the rest of the day. We actually get this marked out. Yeah, so you can see this is a big previous point of interest. Was there SMT on this move? There might have been. Did I mark out an SMT? But yeah, so we had a similar move on S&P as well. The actual delivery of this would have been a lot nicer. You know, you can see sweep these lows, come down into this fair value gap here that I've previously marked. Swept sell side here, like literally beautiful soup setup pretty much. And then from there on the 5-minute chart, you know, you get a lovely fair value gap and displacement pass here. This is your breaker structure in here. Price taps this order block, you know, bit of consolidation, and then wick down into this fair value gap here, and then the push up. These highs taken, price comes back down, re-enter on this order block for a further push up to fill this higher time frame order block here. And yeah, that would have been absolute banger trade, to be honest. I was eyeing this up. You know, on 0.69 risk, that's what, £96. 0.69% risk to reward. You do that with what, 1% risk to reward. 36. 145 quid for £46. Like, do you know what I mean? It is what it is. Missed out there. It was pretty much after the order just messed up when I placed it. I just stepped aside because I knew that I would be chasing a move if I'd stayed playing it. And yeah, so you know, didn't take a massive loss there. Literally like 20p pretty much, so like nothing lost. And that is just like broker costs, commissions on the actual trade itself. So looking at the S&P today, what have we done? We pretty much just accumulated over most of the Asian session, and then you have to look at like the daily power 3 for the daily candle. Price comes down above opening price, pushes it up, displaces down. We tap into this fair value gap, again. This seems to be a point of interest at the moment. Come down from that, break structure, trade back into this order block here, push up, back into this fair value gap, and accumulate, and then down again. A little bit of movement through here. And then, you know, you get your, didn't quite displace there, then sweep these lows, come back up, take these highs here right before 9:30, so this is a what, 9:15, sweep the highs, you get an inverse fair value gap through here, which is also in this point of interest again. It's quite actually interesting to see. Let me just mark this up. Yeah, so if you looked at that, you know, that's your inverse fair value gap. Just put a template on that. And then, yeah, you see price just absolutely rips down to the OTE zone on the fib and into this. What are we looking at here? What is this? It's just like the daily, yeah, that daily fair value gap that I marked out, and you can just see that we absolutely pummeled downwards on the Friday, and surprise, surprise, this inverse fair value gap over here is where the move slows down. Oh, I mean, we're still continuing down at this point, but yeah, look at all these lows down here, easy targets, you know. Might see this one taken. I kind of feel like we may stop at the bottom of this fair value gap and then begin heading up, because we're going to have, well, you can already see that we've got this big imbalance here that we will need to fill in. And yeah, it's just when I might give it a couple of days going into next week just to get more of a gauge on what the market's doing. I'm not looking to rush any trades. Didn't trade today. I was absolutely flat out at work, so yeah, I wasn't really keen to trade as well. I went out last night, so sort of nursing a hangover, and then it's just not really optimal. Plus, trading on a Friday is never really my favourite thing to do, just because if you lose on a Friday, it kind of just bums you out. But it is what it is. It's taken 2 trades today. Not today, this week. There was potential for 4 if I had executed properly on yesterday's trade. And then Wednesday I said I wasn't going to trade anyway, but that one would have been a banger short as well. So yeah, it is what it is. We are up for the week. How many pips am I up? I think. Let me just double check. Let's have a look. So for this week, where we at? Monday. That last week. Monday, Tuesday. Yeah, so literally 2 trades this week, break-even trade and 69 pips for the week. So that is pretty nice. I'm not sure how many pips that is for the month, but we've got a pretty green month so far. What we are now, we're on the 18th. So what, 3 weeks ago, 38 pips. 113 pips minus 36. Yeah, I'll put the amount of pips and stuff for the month in the description, just so I have a journal of it pretty much. But yeah, so far good month. I was very happy with that. Also, if you're not subscribed, just subscribe, mate. Do you know what I mean? Actually, it doesn't even matter if you do or not. Like, may as well. But yeah. So looking at the actual daily candles for the week, then, what we got? So we start here on Monday. Think of it as one big weekly candle, push up. This is your wick here. You have the body of the candles, with the main body downwards on the candle. So I wouldn't be surprised if we maybe take this low here and then we see. Just seen. Well, I just thought of something here. So I would anticipate maybe something like this. Something like that. I know it's a bit messy on screen. I'd want to see this swept, and then we'll get something similar to what we saw yesterday. So if you think of what I'm looking at here, we sweep, push up, trade back in, and then take the highs. So it wouldn't exactly be the highs that I'm looking at, but because we've got a daily imbalance, or do we could end up with a daily imbalance where we just trade up into this, or we trade up into this inverse through here. I know it's very messy on screen, this little inverse here. So yeah, no complaints this week. Just shame I just was like a second too late on my entry yesterday. Yeah, that's my main peeve, I'd say. But yeah, overall we're in profit for the week, we're in profit for the month, doing good. So we will keep at this, and I'm going to do a market overview for the whole of next week on Monday evening or something like that. Maybe during the weekend I might just do some back testing, to be honest. Let's have a look through, see what we got going on. I'll do like a full news review and all of that. But yeah, just a summary. 69 pips this week, 2 trades, 1 break even, 1 winner. No, 3 trades, 1 break even, 1 loser, 1 winner in profit. So it's fine. Trust the process. Gotta love it. Right. Yeah, have a nice weekend. I'll see you in a bit then.